It's most likely the case that you don't know who controls your mortgage and thus who controls your future. My name is Diego Mendez. I'm a bankruptcy, loan modification, and foreclosure lawyer here in Miami, Florida. I've had the privilege of negotiating directly with banks, their lawyers, and their representatives for my clients throughout South Florida, directly dealing with their loan modification, foreclosure, and bankruptcy issues. In that process, I've learned a lot about how mortgages and mortgage servicing and mortgage investors and loan modifications work. I'm going to talk to you a little bit about how mortgages are structured and how that helps you understand what's happening behind the scenes when you're applying for a loan modification or some sort of help from your bank. Be sure to like and subscribe my channel, Debt Law, Survival Guide for the Desperate Debtor, while I deal with all the issues around coronavirus, forbearances, loan modifications, foreclosures, and bankruptcies, all associated with what's happening now, right after the coronavirus has ended, and how a lot of people are going to be dealing with these issues for years to come. It's very likely that you do not fully understand what it means to have a mortgage, who controls your mortgage, who makes decisions for you, and what happens when you run into trouble. The problem is that there's a party in your mortgage that you have never dealt with that basically controls everything that goes on with your mortgage. It's sort of like a deep state. I don't necessarily believe in that, but there is something behind the scenes and a group of people behind the scenes that actually manage and control everything that happens with your mortgage. And you only see these people when you run into trouble. So I'm going to explain to you how mortgages are structured and what you can do when you run into trouble, so you understand who is actually making the decisions and how to understand what the bank is telling you, how to interpret what they're saying to you. Because a lot of times they're telling you things that don't make any sense, but you need to look at them through this prism that I'm about to show you so that you can make sense of it. So when you get a mortgage, there's three parties involved. There's you, who own the home, the homeowner. There's the mortgage servicer. The mortgage servicer are the people you deal with on a daily basis. These are the people that send you the bills. These are the people that you talk to on the phone. This is the face of the process. So whenever you run into trouble or when anything happens with your mortgage, you're dealing with these people. This could be Wells Fargo. This could be different types of banks that you've seen throughout the years. Whoever sends you the bill, this is the mortgage servicer. Now, the third party, and the one that you do not deal with, but the one who has the most control over your mortgage, is the investor. The investor can be anything. It can be an investment bank, it can be a group of banks, it could even be an individual. In some cases, in all cases, you do not know who they are. It's possible to find out who they are, but these parties generally have no direct communication with the homeowner, with you, so there's really no way to find out. Now, these people also change. Mortgages are sold back and forth between mortgage investors, people that deal in this type of business, and this was the problem in 2008. This is less a problem now, but it's still something that you need to understand, specifically when you're dealing with loan modification. The reason for this is that the people that you talk to on the phone don't necessarily have much power to do much for you if the investor has limited that. So in my chart here, you see the investor has a relationship with the mortgage servicer. This is the most important relationship in the loan modification and forbearance and loss mitigation process. The servicer has a relationship with you. The servicer collects your money, the servicer takes down information. The servicer is the one that actually does the loan modification application process for you. However, what you have to understand is that the servicer is not the one who's necessarily going to decide in the end how your loan modification is going to play out. You have to understand that between the servicer and the investor, there's something called a servicing agreement, which is down here in blue. The servicing agreement, for you to understand, is basically the investor rules. The investor rules is something that you're going to hear when you're either denied or something happens with your loan modification application. They're going to say, well, the investor rules do not allow this. The investor rules don't allow you to do this or that. Now, the servicing agreement is the contract that determines what the servicer can do for you. So if the servicing agreement says that they're allowed to extend the mortgage to 40 years, or bring it out to 30 years if you have a few years left, or lower the interest rate, or put some portion of the principal on the back as some sort of deferred amount, all of these things are in the servicing agreement. You have no control over this. You cannot change this. This is something you have to understand. The servicer, which is Wells Fargo, Citibank, whoever sends you the bills, is basically following the rules of the lender. Of the investor. The investor is the one who is the most powerful person in your life when you have a loan modification or some other problem with your mortgage. You never actually deal with these people until you have a problem. When you have a problem, when you stop paying, when there's an issue with your mortgage like that, the investor rules kick in. The investor rules control when and how the servicer can give you a forbearance, when and how and what the terms are of your escrow and your loan modification. So the investor rules is what determines everything when you're applying for a loan modification. I've had countless direct negotiations through mediations, which is not something that's readily available to a regular loan modification applicant. A mediation is something that happens either in a foreclosure, or in a bankruptcy, or in some situation where there's a severely delinquent mortgage payment, and sometimes the bank will have a mediation with the homeowner. Basically, I've had hundreds and hundreds of communications with banks in these conciliation calls and mediations, and I've dealt directly with the representatives of the bank, in some cases even the investor representative. I've learned a lot about how these people think and what they can do and what they can't do. So it's very important to understand that the investors basically haunt your mortgage. They are a ghost, okay? You cannot talk to them directly, but they determine everything that goes on with your loan modification and your forbearance. It's very important to understand that when the servicer tells you that the investor rules say X or Y, might be the end of your case. You can always ask for a waiver. A waiver is something where, let's say that the loan modification servicer is telling you that they cannot extend to beyond 30 years, or they can't lower the interest rate because the investor rules, the servicing agreement says they are not allowed. Many times you can ask for a waiver of this rule. You have to ask for it specifically. You cannot assume that the loan servicer the mortgage servicer is going to do this for you. You need to ask for it. And the way to ask for it is either over the phone or in writing. Now, I would prefer everything in writing, because writing actually is the way that they will communicate back with you. So you should, in writing, write a letter saying, after you've been denied for loan modification, let's say because they can't extend the term beyond 30 years, ask if there is a waiver of this, and if the investor will allow a longer extension term to give you a loan modification. It's worth a shot. It doesn't always work. A lot of times there are no waivers, but if you don't ask, you don't get. So the point of this is to understand that when you're dealing with whoever you deal with directly on a daily basis with your mortgage, you're not actually dealing with the person who makes a decision in your loan modification case. Those decisions have already been made in the background with the servicing agreement. You need to understand that the only way you will ever know what the servicing agreement allows you to do is to apply. When you apply, the bank will either approve or deny your loan modification. If they approve it, then you already have your loan modification, and hopefully the terms are proper, and you accept it. Now, I'll talk in later episodes what happens when you don't like your loan modification. I'm not going to talk about that right now. Now, let's say that they deny you. When they deny you, this is actually a positive thing. When you're denied for a loan modification, if you have time to reapply, obviously if you're doing this the day before a sale, it's not going to help you. But if you have time, the denial is a very valuable piece of information. That denial will tell you what the investor wants from you in a loan modification. If they deny you for lack of income, then you should think about how you can either make more money working, or if you have people who live with you who are not on your loan modification application, you can use contributor income to reapply and get a loan modification with the contributor income. Now, I've talked about this in other videos, and I'll continue talking about this specific issue of contributor income and how to get around the denial. But for now, understand that the mortgage servicer is not the one who's going to make any kind of final decision on your behalf regarding your loan modification. That's it for now. My name is Diego Mendez. I'm a loan modification, foreclosure, and bankruptcy lawyer here in Miami, Florida. Like I said, I've helped hundreds and thousands of people with their loan modification applications. I've dealt directly with the banks. I've negotiated these things. A lot of times you can do things, a lot of times you can't. This is not a guarantee. Loan modifications are a risky proposition. You should know what you're getting yourself into when you apply, but it's worth applying because you never actually know what you're going to get until you apply. Please like and subscribe to my channel, Debt Law, Survival Guide for the Desperate Debtor. I'll be making more and more of these videos, and I will keep talking about this every Monday and Thursday for the near future so that everybody can understand what's going on after the coronavirus has ended and we're moving back into a regular economy. Thank you very much, and have a great day.